Hi, this is Sean Hyman from Chart of the Day, and this is not your typical chart of the day we're going to have. We're going to have a little bit of a different day. We're going to take a field trip to the stock market, but it ties into currency, so I want to show you something here. Here we see a chart of the Dow Jones Industrial Average, and the chart is heading up in an uptrend. Just recently hit a recent high. And you're basically going to see that most all the stock market averages in the U.S. right now. Again, we have the stock price heading up, hitting a new recent high as well, right? Okay, everything looking fine there, right? At least for now. But I want to show you something. Let's start with, I want to show you China stock market. Whoa, wait a minute. Their recent top was way back here. So we're talking August was their top, and they have not come near surpassing that. So they took a stiffer beating here lately, and the buyers haven't been as quick to come in and push that up. That's interesting. Let's look at another one, and there's several of these like this. This is Japan's Nikkei. Let's take a look here. And its peak was in about last of August, almost made it till September. So in August, and going into September, you're starting to have some money flows that have pulled out and have not run up these some of these foreign markets quite as much as the U.S. here lately. So what does that tell you, and how does that tie into currencies? For the first time in recent, just in the last month or two or three, there's just starting to be, this is the beginning phases, starting to be outflows out of Japan, China, some of the emerging market charts look the same way, out of these areas, and they're going back into America, into the U.S. stock market. Now, the U.S. stock market will eventually pull back and have a sizable correction as well, but it shows where money is starting to flow. It's first starting to flow out of foreign stocks more and into U.S. stocks more. Then it's going to work its way. Let's see here. See if I can pull this up into U.S. bonds more, and you can see that they're starting to perk up as well here recently. So they bottomed back in June and July, and when did these others top? They topped in August. We have a flattening out in August, and now we've got lower highs than we've had in these other months here recently in November in U.S. bonds. So what is this telling you? The tone of the markets is starting to get cautious. It's starting, formally in the last 3 to 6 months, previous to those previous 3 months, the money's been running towards foreign markets that are some of your G7 countries and your emerging market countries, and that turn is just starting to unravel. I don't think most of the public picks up on it yet, because there has not been a major correction or a major crash or anything of that sort yet. Not saying that's going to happen tomorrow morning or anything like that by any means, but the process is likely starting, where it's starting to pull out of riskier areas and roll into the U.S. Now, it won't forever go into U.S. stocks. It'll eventually roll out of U.S. stocks on our last chart and into bonds here as well. But when all this happens, what's that going to do? That's going to make, no matter what instrument it goes into, if it comes from foreign lands into U.S. markets, whether it's stocks or bonds or CDs or, you name it, there's a myriad of financial instruments. You can debate which one it's going to go into, but you guess what it's got to go through first before it can go into any of those? It's got to convert from foreign money, from foreign currencies, into U.S. dollars. And from those U.S. dollars, you can take U.S. dollars, the foreigners can take those U.S. dollars and buy U.S. dollar-denominated products, such as U.S. bonds, which are treasuries, things of that sort, U.S. stocks, and that sort of thing. So the dollar will be one of your big bets when all this starts to crash and bonds start to prosper and stocks start to fall here in the U.S. That's going to be one of your big keys, because the money's starting to shift, remember, already from these foreign markets to the U.S. stock market. It'll further shift from U.S. stocks to U.S. bonds. When it does, you're going to see the pickup in the buying of the dollar even more so, and that's when you're going to see a short-term rise in the dollar. I say short-term. The rise in the dollar will last as long as the stock market in the U.S. and foreign markets crash or correct. When that stabilizes, then money will roll back out into foreign markets, and the long-term decline of the dollar will continue. So anyway, just wanted to show you some early signs of some things that I don't really see anybody out there talking about. Just my special chart of the day viewers are the ones that get to get a lot of these insights. So I hope you find this very valuable to you, and I know it's very rewarding to me. Thanks so much for watching. Bye-bye.